With gold prices holding above $1,600 an ounce, one major U.S. bank is reversing its projections for the year. Citigroup saying that it expects gold to hit $1,700 in the next 6 to 12 months and $2,000 in the next 12 to 24 months. I'm sure my next guest is not surprised by these projections and would agree. Frank Holmes of U.S. Global Investors joins me from Toronto today. Frank, good to see you again.
Go gold.
Yeah, well, I was going to say, you were calling for $20,000 gold. I wouldn't be surprised to see the projection slowly to that mark. So I'm sure hitting 2,000 is not a surprise for you. How do you see it?
No, because the DNA of the normal volatility of gold is plus or minus 20% over any rolling 12-month period. And for the past 20 years, 80% of the time gold has been positive, which is very significant, and it's nothing for it when gold is 1,600 to rally 20% from here. That takes it to 1,900. And with all the money printing again, we're seeing now Greece, which was the basket case 7 years ago, is all of a sudden offering rates of 1%. And they haven't improved their economy to any great degree. All of Europe is once again negative real interest rates to try to spur economic activity. The 10-year government bond in the U.S. is close to an all-time low. Mortgages in America, the 30-year mortgage is only 30 basis points off the 2016 low. So I think that gold always rallies when rates start collapsing like this globally.
Okay, and it's also, how much would you say also has to do with the fears of the coronavirus, that it's a fear trade here, Frank?
There's no doubt the fear trade of corona is showing up because corona, unlike SARS, corona is much more like 9/11 because of all the flights being canceled. A city like Wuhan contained, that would be like containing all of Chicago. There's great fear over what's taking place. And all businesses stopped in Wuhan, but there's clouds everywhere. Well, they say it's because of all the bodies that have to go to be cremated. So all that negative news is no doubt having a big impact on the fear. So we're also seeing out of China a big drop in the supply of Bitcoin mining because no one can go to work.
Yeah, and I want to talk about Bitcoin in a second, but you are actually doing a webinar focused on $2,000 gold today, Thursday, with Martin Mernbield, another well-known gold analyst. So tell us a little bit about it. Are you going to be making the case for $2,000 gold this year?
Well, yes, and also why gold stocks are so inexpensive. Martin has done some proprietary research of looking at ratios and just showing that gold stocks are unloved. But we're seeing like Hochschild, which is not listed in North America, but is listed in London. They've had are up 13% today. They had a 100% increase in their cash flow. So some of these quality gold stocks are really showing the benefit of $1,600 gold. So when gold goes to 2,000, we could have massive growth in revenue and cash flow per share. And that's what the world looks for when they look for public companies. So I think that the industry is poised for a great sustainable rally here.
And we'll actually have an interview with the CEO of Hochschild next week at the BMO Metals and Mining Conference, which I'm sure will be buzzing. So Frank, with mining stocks underpriced here, are you looking at exposing yourself more to the gold miners than physical gold?
No, I'm still a big buyer. Buy those silver coins, and that's the best gift to give away to all friends and relatives and birthday parties for kids. And definitely 24 karat gold jewelry is a top thing on my list. And then it's the quality gold stocks. I think that's what's really important. The royalty companies, they're also significant underperformers. And there's just so many of these quality gold companies that are much more disciplined than they were in previous cycles in how they're managing the capital spending and how they're recognizing that you have to have revenue per share growth, cash flow per share growth, and reserve per share growth, not just top line growth, to have your stock outperform.
Finally, Frank, you mentioned the cryptos getting a bounce off of this coronavirus here. And I had an expert on last week who was saying, look, people who are trying to transfer large sums of money out of certain countries, the easy way is through cryptos. So is that what is supporting Bitcoin and whatnot right now?
Well, I think the big thing with Bitcoin is a supply. That is, the miners, the huge facilities they have in China really aren't working because of the virus and the lockdown. And so I think supply side is there. And then the overall demand, which you just talked about. And what I thought so interesting at being at the Satoshi Roundtable last week was learning that there are so many of these ATM Bitcoin machines, and they're very prolific in Miami and Orlando and London, England, because of people from Argentina and Venezuela. It's the easiest way for them to mine in the cloud and then be able to get money out of those countries, which are just basically inept countries, how they financially manage their affairs. And Eastern Europeans, to get money out of their countries, they show up in London and all of a sudden they get Bitcoin. The other thing is to recognize that in mid-January, we saw many pronouncements of central banks. We even had Federal Reserve Powell comment that the Libra coin by Facebook was a massive wake-up to the government, and everyone's running to get into fintech and understand digital money and the importance of digital money. And so I think that positive note, and what we saw was Ethereum went above the 50-day high blockchain, which, as you know, I'm the chairman of, and we mine in Scandinavian countries, Ethereum as the largest producer of Ethereum coins. And we saw all of a sudden our volume go from 1 million shares in the past 2 weeks, 15 million shares a day on average. Stocks jumped up over 400% from the selling that took place last year. We're profitable, and we're very excited about the opportunities for growth.
Frank Holmes, thank you so much for your thoughts today. We will catch up with you soon.
I'll see you in Florida.
You will not see me. You will not see me in Florida.
No, I'll cry.
But you'll be in good hands. My colleague Paul Harris will be covering the event and interviewing all the juggernauts from the event. So enjoy for me, Frank. Thank you so much.
I will.
And thank you for watching. We'll be back tomorrow.
The mining sector is going through a lot of change right now. We need to see a real breakup. It's game on.
I think if gold continues to go, silver is going to move quite rapidly.
If we see that, like we might see in gold, if it comes into silver, that could be the thing that pushes silver price.
If you look at the gold-silver ratio, both metals went up. It's just silver went up more than gold.
I'd ask people to take a step back and see what's the future between the two companies.
Frankly, it's the first time I've ever seen a hostile at a discount. When you look at some of these big acquisitions, they're really looking for these new discoveries.
Well, the price of gold has been moving higher even as rates had been moving higher.
Indications at this conference are that it is turning around. There is increasing interest in the precious metals.
It's a good trend. I think if we could see more of that happening.
It's a buying opportunity. Buy on the pullbacks. What's happening with gold will take 3 years for people to wake up.